Hey everybody, welcome back to FSP Forex-Stock-Predictions. Hope you're all having a great day. I am the Vortex Trader, and today we are going to be going over an article that I published yesterday titled The 10 Main Reasons Why New Traders Lose Money. So, without further ado, let's jump right into it. Alright guys, so this article that I published is on our website, Forex-Stock-Predictions.com. You can visit it if you want. It is just a great resource filled with a lot of information and educational tips, and it has a whole bunch of various traders, their thoughts, their approaches on the different markets across their entire financial spectrum. It's got a lot of cool little gold nuggets that you can find in, so it is just a great resource that you can use along with your trading journey. Right, so this article that I wrote yesterday, the 10 main reasons why new traders lose money, it's an ode to my trading journey, right? And I know it is the same to many of you, right? I do target the newbies because every single one of these reasons why new traders lose money is something that I went through. It is a period of time in my life that I went through in order to become profitable. And that's just the plain cold truth. I did not jump in and 6 months later I became profitable. No, it's been a 5-year journey for me, and to become profitable took me 3.5 to 4 years. It did take the time, but the reward was so worth it, as it is for every single other trader, regardless if you become profitable in a year to a year and a half or 10 years. It doesn't matter. Everybody's different, right? And we all go through these 10 things in our own pace. Right, so have you ever wondered why new traders lose money? Well, there is that saying, right, that 90% of new traders will lose 90% of their funds in the first 90 days. That is so true. I myself became a statistic. Never thought I was one, but when I started trading, I became one of those. I was a statistic. And here are the 10 reasons why I lost money myself and why many other newbies lose money as well. In no particular order, we got number 1, lack of a trading plan. When I first started out, I didn't even know what a trading plan was. Honestly, I had no clue what this trading plan is that I saw traders online speak about. I read books on it. I'm like, what is this trading plan? How do I make one? Am I supposed to buy one? Where do I get it from? What is it, right? Many new traders enter the market without a clear trading plan, which leads to impulsive and emotional decisions. A trading plan should include a set of rules for entering and exiting trades, as well as a risk management strategy. Building a trading plan takes time, and sometimes the best trading plan is built through all of our previous failures. For me, that was how my trading plan was built. I built it through my failures. And I always say, learning to fail whilst learning to trade probably gives you the best shot of succeeding in the long run. If you can take your failures and be like, cool, I failed here, let me learn why. Why did I fail here? What did I do wrong? How can I do better with it next time? That is gold. If you can do that, you're on your road to succeeding. Right, next one, number 2, insufficient capital. This one is interesting because as a newbie trader, you want to take as much money as you can. You think you can flip it. You see those Instagram marketers online which say, let me teach you how to take $100 and turn it into $10,000. Just pay for my course. And I'm holding up my hands right now, say, with inverted commas in a quote form fashion. That is all, pay for my course and I will teach you how to flip your account to $10,000, whatever. That's nonsense, right? That's utter rubbish. Do not fall for it. A lot of us have fallen for it because this industry gets a bad rep online. There's so much nonsense that we got to filter through, and as a newbie, you don't know what's true and what isn't. You don't know who's trying to scam you and who isn't. It's just the truth, right? You need to take the time to go through everything slowly, right? Be very skeptical, right? Do not just think that you can jump in with any amount of money and flip that and turn it into a fortune. No. Day trading requires a significant amount of capital to be successful. New traders often underestimate the amount of capital they need to start trading and end up risking too much of their account on each trade. Okay, there are other ways for consistently profitable traders to get their hands on sufficient capital. Guys, if you can prove that you have a strong equity curve, if you can prove that you are consistently profitable, if your equity curve looks like a nice bullish market, a nice little uptrend, money will find you, right? I always say, and this is so true, that money finds people that know how to make money. Money finds money. Money is attracted to money. This is the truth. Okay, so if you are profitable, you can always go the prop firm route, you can go the private investment route. You will not worry about how to find money. If you can prove that you are a profitable, consistently profitable trader, you will have money. So don't worry about the insufficient capital as yet. And if you do happen to have access to a large amount of capital when you're first starting out, my advice is please don't throw such a giant lump sum into a trading account, because more than likely you will lose it. And even if you have beginner's luck and you manage to make a couple of bucks, you're going to lose it. You're going to lose it. So take your time, start small, become profitable, and then the rest of the money will flow. Okay, lack of patience. Day trading requires patience and discipline. New traders often make impulsive decisions based on short-term market fluctuations and end up taking losses. Learning patience in the market comes from time spent inside of the markets. Once you have a trading plan and a strategy in use, your lack of patience won't be an issue, because you will understand when and how and why, etc., to get in and out of the markets. All right? Makes sense, right? As traders, when we're starting out, we are so impatient. We just want to make that money and run. We just want to do this, right? And then when we're not, and we don't follow our strategy, or we don't see a setup, we get emotional. We want to jump in anyway. We're like, you know, conserving capital is a trade within itself. If you can conserve your capital without just throwing it needlessly to the whales of the markets and the institutions, don't throw it away. You worked hard for that money. Practice your patience. Only get in when your strategy says you should. Okay. Overemphasis on short-term results. This is another one, right? Day trading is a long-term game. And as new traders, we focus too much on the short-term results. This can lead to emotional decision making and a lack of consistency, right? While we're trading. When you start your trading journey, you won't know if you're better at scalping or swing trading. You won't know what type of trader you are. You won't know what type of markets you like to trade. You won't know what works for you, what doesn't work for you. This all gets revealed to you in time, right? Trading needs to fit in with your lifestyle, your personality. It needs to fit in with who you are as a person and how you see the world. This is so true. So do not let these short-term results get the better of you. Don't do it, right? Trading is a long-term game. We need to take the time to acknowledge that. Okay, so don't get hyped on these short-term results. If you get into a bit of drawdown, if you're losing money for a few months, even a few years, if you are consistently profitable, that does not matter. Okay, I just don't lose, money for maybe more than 1 year. Just try, maybe tweak your strategy, see what works, see what doesn't work. Backtest, 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 backtest. Right, over leveraging. This is another biggie. New traders will take, let's use the $100 account size as an example. They'll take their $100 and they will risk maybe 80% of their account size on a possible position. And if they win, they'll win a couple of bucks, cool. And then they'll think, if I can make it to $1,000 with $100, surely I can make it into the tens of thousands. Nope, you won't. You're going to lose it, which is going to lead you to being emotional and revenge trading. And you probably won't even get there because you'll be risking too much, right? Top traders in the world, they're only risking maybe 0.5, maybe 0.25, 1% per trade. Weird to think, right? As a newbie, you risking half of your account size. This is only because you don't understand risk management. This all gets revealed to you in time though. So do not over leverage. Trust me, it will not be good for your account. It will end up blowing your account very, very quick. Eventually you will get margin calls and boom, account over. Okay, I went through this. A lot of other traders do as well. Lack of education. I'm just laughing because I'm thinking about this, right? A lot of people think they can, start their trading journey on January the 19th, and by the following Wednesday, they will be profitable and they will be rolling in the dough. No, you won't be. You got to think of it as a business. You cannot start a business today and become profitable with that business. Doesn't matter what that business is. You won't become profitable with that business within a week or a month or a year even. No, it takes time. If you are getting a higher tertiary educational degree or a master's or anything, from medicine to engineering or law, whatever you're studying, anything, any skill that you want to pick up, even cooking. If you haven't cooked before, you're not going to become a brilliant cook by next Wednesday and have a Michelin star restaurant underneath your name. No, things take time. So education is so important. You got to take time to educate yourself. You got to educate yourself. Choose whether you are going the fundamental route or if you're going to go the technical route or if you're going to do sort of a blend of both. That's just the actual charts themselves and the markets. But what people often forget is the whole psychological route as well. Trading is such a mental game. People forget that our psychology probably plays 90% of the role that we need to use inside of trading. Our psychology is so important. People get angry at the markets, they get emotional whilst trading. If you can really learn to master your ego and to become stoic and just to trade in the complete present without feeling the need and this rise from your ego to get all emotional and wanting to start bashing out on the markets, or you're hoping while you're inside of a position, or you're freaking out, whatever. Remember, guys, the markets don't care about any of that. The markets are going to do what they're going to do regardless of how you are feeling. So if you're having a bad day, or if you are having a good day, and you're happy, or you're excited, or you're sad, or you're angry, and you're trading from those mental positions, the markets do not care. They're going to do what they're going to do. But you're going to stuff up because of those states that you're in mentally. Right? My advice would be is to keep a mental journal. So whenever you enter a position, you have a normal journal, right? You take a screenshot maybe, you write something down. Do the same thing with your mind. Write down how you were feeling. Write down your emotions at that moment. So when you go back at the end of the month or the week and you analyze your previous positions, you can also see your mental state that accompanied those positions. And over time, you'll learn that you don't need to be emotional, right? Another thing that we can think about is that trading is a probabilities game, right? It's just rolling the dice. That's all it is. Why should we become emotional about rolling the dice? We don't know if a trade is going to win or lose. We don't need to know if a trade is going to win, if a trade will win or lose, right? All we know is that we have a very strict set of rules and a strategy that we're following, and over the long term, that strategy makes us money. So when we're losing money, it's okay. Everyone loses money. And if we treat trading as a business, then we got to think of our losses in terms of running the business, right? A loss could be paying rent on the business. A loss could be paying someone's wages or salaries, or paying for your rent or your overhead or your overheads or your expenses or your lights and heat and your water. That's what losses are. All right. Let's move on. Failure to follow the rules. This one is funny because even the pro traders, occasionally break their own rules, which is weird because they are their own rules. They are our rules. They are your rules. Day trading requires discipline and consistency. New traders often fail to follow their own rules and end up taking losses. You have a trading plan for a reason, guys. You spent time and effort building this plan, right? We drilled this into ourselves. We took the time to really figure out what works and what doesn't, right? We have on paper, on our desk, in front of us, a whole set of rules that we're supposed to follow. And we know that if we follow these rules strictly with military precision, we will make money. So why would we break them? Funny to think about that, right? If we look at it objectively from the outside in, how the human mind works. Because you would tend to probably break your own rules if you are trading from an extreme emotional state of mind, right? If you are not calm and cool and collected in front of the markets, if you are overexcited, or if you are sad, or if you are angry, however you are feeling, could impact if you are going to be breaking one of your own rules. So that's why I say it's so important to follow your own rules, because the second you break a rule, that's technically an entire new strategy that you would then have to backtest. over years of data. So please follow your own rules. They are your rules and they are there to keep you profitable. So it would be a pretty bad idea to change them or to go against them. Lack of emotional control. So, this is the psychological thing again, right? Day trading can be an emotional roller coaster. New traders often lack the emotional control necessary to remain calm and level-headed during market fluctuations. With time, you will learn that trading based on your emotions is a one-way ticket to a blown-up account. The markets do not care about what emotional state you are in. One cannot be emotional whilst trading. Like I said before, trading should be treated as a professional business. Losses are just as important as wins. They are your expenses. Remember, consistency is key. Emotions do not matter when it comes to trading. Over time, you will learn how to trade in this stoic sort of carefree state of mind, and you will approach the markets with zero fear. Once you have control over your emotions, you will be at zero risk of making any mistakes. And therefore, consistent profits will flow to you because you'll be trading from this carefree state of mind. Such an important thing, something that cannot be learned over a weekend, right? A lot of traders meditate. A lot of traders do various mental exercises to keep control over their emotions because we are only human at the end of the day, and our emotions can and do and will get the best of us for whatever reason. So when we are trading, we just got to remember that. We got to look at them objectively and say, hey, I'm feeling a little bit hungry here. I'm noticing that. I'm noticing that I'm feeling hungry. I'm not going to let it affect my trading because I'm starving. No. All right. No stop loss. This is the next one. This is a big one. How many times have you? I have so many times. When I was starting out, I did this all the time. A position would go against me. First of all, it would go, in the direction that I wanted to go. If I was going long, I would be, yes, I'm in the money, I'm in the green, and then the candle turns around and starts heading towards my stop loss. And then I think, you know what? I think I'm going to move my stop loss. I'm going to move it just a couple of pips down. It's fine. I'm going to move it just a couple of pips. And it heads closer and closer to your stop loss. And I keep moving it. I'm like, I know this freaking market is going to turn around and start moving in the direction that I want. I know it. I can feel it. Well, two things are going to happen here. One, you're going to start getting margin calls because your one position of moving your stop loss will result in a complete blown up account. The other thing that happens is that once you start to move your stop loss away, you get angry, right? And your emotions run havoc. And both are just as important. A blown up account, being angry at the same time, not a good combination, right? That's when you see the funny memes of people throwing their laptops out the window because they get so angry. And this could have all been avoided by having a stop loss in place, right? If you're risking 1% per position or 0.5% on a position and it hits your stop loss, that's okay. You still got your entire account. You got most of your account left. But if you moved your stop loss and now you're risking 3, 4, 5, 6, 12, 15, 20, 30% on one position, not a good thing that happens. And we've all been there, guys. We have all been there. Last one, not having a proper exit strategy. And I say this as in the same way of having an actual strategy that involves an entry, involves managing the strategy, involves exiting your position, right? Good exit strategy is as important as a good entry strategies. New traders often fail to have a plan for exiting their positions and end up holding losing positions for too long. With time, you will figure out what is best for you. You will learn how and when to exit a position, and I say this as well, you will know how and when to enter a position. Knowing when to get out of markets is just as important as knowing when to get in. Once you know how and when and why to exit, it should be stipulated in your trading strategy and your trading plan so you can follow this for all possible future trades. This makes sense, guys. This makes sense. Have it written down in front of you, right? Know when you're going to enter and when you're going to exit. Know why you're going to do that. Backtest. Backtest. I keep saying it in all my videos. Backtest. Then you will know when you're going to exit and why you're going to exit. Don't be scared of backtesting. If you are passionate and dedicated and you want to make this work for you, backtest. Backtest. That should be another rule in this list. Right. In conclusion, day trading is a challenging and complex activity that requires knowledge, patience, and emotional control. New traders often lose money in the first 6 months because they lack the discipline and the knowledge necessary to succeed. I was one of those traders. To avoid these common mistakes, new traders should develop a trading plan, use leverage wisely, and continuously educate themselves about the markets. All right. It's also important to set up stop losses and have a proper exit strategy. Very important. Very, very, very important. So, let me know in the comments if you are one of those traders that went through these experiences, any one of these 10 things. I went through all of them. I experienced it all. Took me a long time to get to where I am, but it is so worth it, right? Risk to reward. What is the risk to reward when learning to trade? Just like when you're opening up a position. You're risking time, you're risking money, you're risking investing into yourself. You're not sure if something's going to work, but if it does, the reward is so great. But another thing, if you do it properly and you study up and you're focused and you backtest and you're disciplined and you take control of your mind and you're present and you do this and you're like, yes, I am going to do this, you will succeed. Without a doubt, you will succeed. You will not fail. You will not fail. But you cannot let the small failures in between starting your trading journey and becoming profitable, you cannot let those small failures deter you and ruin you. Because if you do, then you won't succeed. Right? So enjoy the failing. Embrace it. I always say embrace the confrontation, embrace the failure. If you fail and you mess up, you're like, yes! Cool. Why did I do that? How can I learn from that? It sounds so cliche and everyone speaks about it, but it is so important. It's so important. Learning to fail and figuring out why you failed and how you can fix that. You will succeed without a doubt. You will become profitable. You will become a consistently profitable trader, and the world will be open up to you. You will be able to trade whenever, however, or from wherever. You will have capital. You could go the prop firm route. People will want to invest with you. You could even open up your own hedge fund. You could do whatever you want. If you're a consistently profitable trader, you could do whatever you want. But it does take time to get there. All right, guys. So, like I say, if any one of these 10 reasons were applicable to your life, I would love to know. Please don't be shy about it. We play open cards on this channel. I've been very honest with all of you. So important, right? Because you don't want, when I found my first mentor, I was very lucky. He was completely honest with me, right? I don't like the people that blow smoke up your ass, that lie to you. You know, you need someone that is really going to push you in the right direction. And the only way they can do that is by being completely honest, right? That's how we learn, right? We can't learn from someone that hides behind smoke and mirrors, right? So please don't fall for those Instagram marketers. Don't buy signals. Don't get scammed. Don't do it. Learn to trade yourself. Leave all those scammy things alone, right? You don't need them. And they sure as hell don't need you, right? Leave them alone. Focus on you. Focus on yourself and you will succeed. Okay. On that note, let's wrap up today's video. I hope you guys enjoyed. If you find this information valuable and helpful, please would you give us a like, hit that subscribe button. Let me know in the comments like I've said, and I will be seeing you all in the next video. Thank you so much for watching. See you later.